G'day everyone. Today I'm speaking with Clouted, the man behind ETH Strategy, which is a new on-chain treasury protocol centered around Ethereum, the world's greatest cryptographic asset. Mate, thanks for coming on.
Mate, thanks for having me.
Talk to me about ETH Strategy. I think this is something that people are still kind of confused by in terms of just like the treasury meta in general. There's lots of questions around how treasury companies work, why they exist, what they're doing in the space, how they accrue value over time. So if you could give me a good top line kind of explanation of ETH Strategy and all the moving parts of it, that'd be an awesome place to start.
So yeah, diving right in, like keeping a high level, because these things can get complex. Like honestly, I think I've kind of lost my mind over the last couple of months doing this. But keeping it high level, the idea behind all these treasury strategies, the list goes, and even ETH Strategy that we're doing, is essentially a company or protocol in our case that has one goal, and that goal is to amass as much assets per share that they can. In our case, it's ETH per STRAT. In MicroStrategy's case, it's the most amount of Bitcoin per share, and in SharpLink's case, it's also ETH per share. So depending on whatever asset these strategies are trying to accumulate, they're trying to accumulate the most assets as much as possible. And abstracting all the complexity away, generally if someone is extremely bullish on an asset and wants to accumulate as much of it as possible, there's a really good way about going around this, and there's two key mechanisms they use. So one of them is by issuing equity, and the other one is by issuing debt. And the key here is that both of these issuances, whether it's equity or debt, they issue them in a accretive, dilutive manner. So they dilute their equity layer in an accretive manner, meaning that all existing shareholders are still benefiting from future dilution, because the underlying ETH per share is constantly increasing with dilution. And just to touch on the two ways that they do it is, equity issuance is usually done through this method called at the market issuances, where it's basically in TradFi world, they print a whole bunch of stock, like they dilute stock and they sell it into the market. And they do this when their stock is trading at a premium to what their their NAV would be for their shares, with the backing, the fundamental backing value of their shares. When their stock trades at a premium, they call that like an MNAV, a multiple to NAV. They can print shares and sell that at that premium, and they're basically pocketing like lots of crypto assets for cents on the dollar by doing that, because they're capturing that premium that the market is pricing. And then the debt portion is when they issue corporate debt in the form of bonds, in more specifically convertible bonds, convertible notes, where people buy the bonds of the company. But they not only have the option to kind of receive their debt back at the expiry of the bond, they have an option to convert to equity. And the reason why they will do that is because, over the duration of this bond, if it's a 4-year bond or whatever, the stock price or the underlying, crypto assets that they've accumulated have gone up so much that it's much more in their favor to convert to stock than it is to get their dollars back. And when they convert to that stock, again, that creative dilution thing kicks in, and it kind of locks in that treasury that they accumulated from issuing that debt and buying the assets. So yeah, all in all, a company or a protocol that issues debt or equity to accumulate crypto assets in an accretive, dilutive manner. That's what I would explain this whole strategy meta around.
So can we go into a little bit more detail around the actual mechanism of acquisition for ETH Strategy itself? Because I know that there's the underlying, you're essentially buying, and correct me if I'm wrong here, this is like the Neanderthal understanding. Because I understand that it's very similar to MicroStrategy, the accretive dilutive model. Can you talk more about how the treasury accumulates ETH in terms of ETH Strategy itself?
Definitely. So ETH Strategy does use both of those methods that I touched on. So it issues both equity and debt. I will first focus more on the debt component, because that's where a lot of the on-chain innovation came from for ETH Strategy. So just to give some context, we started this about 6 months ago. so about the beginning of 2025, and that is before basically all these ETH listco strategies came around, like before Sharplink, before Bitmine, all of them. And at that point, a lot of the market wasn't even actually paying too much attention to this strategy meta. There was no meta. We kind of like, it was only MicroStrategy at that time, and a lot of people didn't know what they were doing. And, did a lot of digging and a lot of thinking into the mechanics and the model that Saylor really did. And what I really discovered was, I think that Saylor had to do something kind of genius, whether he came up with it himself or the market kind of forced him into it, to be able to raise money to buy Bitcoin. And no one would lend him money to buy Bitcoin, right? Like, it's crazy at that time. They're like, what the fuck is this guy doing, right? But what Saylor discovered, or the market kind of helped him discover, is that he had to provide some sort of exogenous value to the market to be able to acquire the capital to purchase Bitcoin, especially in the sum of billions. Now, this exogenous capital came into this form of his convertible note strategy. And his convertible note strategy was that he issued these corporate convertible notes against MSTR stock. And a convertible note basically has an embedded option inside of it. It's a debt receipt with an embedded option. And being an option, those conversion rights that allow you to choose between getting your debt back or converting to equity, being an option, this option has some inherent value, right? And because this option is on MSTR, and MSTR at the time is basically a proxy for Bitcoin, and it still is, you can assume it's kind of like an option on BTC or on some sort of leveraged proxy for BTC. And this option being valuable allowed Saylor to kind of create an arb in the market and sell these options for cheap. So the embedded option in these notes was actually mispriced on purpose. And a lot of hedge funds and Wall Street guys love, this options world, and they love buying cheap options, because what it allows them to do is it allows them to open up a trade that is usually not possible, because most option markets are very sharply priced. The only people that will ever sell options mispriced on purpose are when they have a fundamental need to do that. And in Saylor's case, his fundamental need was to raise capital. So he sells cheap options in these notes, and Wall Street buys up these notes, right? And when they buy up these notes, they give Saylor money, and Saylor goes and buys Bitcoin with that. Like, he's happy. And Wall Street's also happy because they don't really care that they're lending to some, crazy guy that wants to accumulate Bitcoin. They care because they are now getting cheap options on MSTR. And what that allows them to do is do a special trade called a gamma scalping trade, where it's basically a volatility farming trade, where they can extract yield off of the volatility on MSTR or Bitcoin per se, and that results in some really good yield per year over annually on their capital. Very attractive actually in TradFi terms, probably less attractive in DeFi terms, but still very attractive. And Saylor basically opened up this volatility trade for Wall Street, allowed himself to raise capital and basically buy Bitcoin, and allowed Wall Street to capitalize on high yield from the volatility of Bitcoin. Now, ETH Strategy was heavily inspired by this. We were really like captured by the exogenous value creation here. Like, this volatility trade is a fundamental trade. It's something real. This happens in TradFi. Gamma scalping happens in TradFi a lot, and it's usually in very exotic structured options products. And Saylor's one is a little bit more liquid than it normally comes out to be, right? So this is what we first kind of had the vision of recreating on chain, and that's what we've done. So at its core, ETH Strategy accumulates ETH by doing the same thing. It issues convertible notes, but in a very DeFi primitive way. So these notes they come pre-stripped is what some like investment banks call them, where the option proponent and the debt proponent are kind of separated. So in the on-chain world, we have like we have a liquid debt proponent where it's like a ERC20, it's a perpetual debt, and the option is represented as an NFT. So it's not just like one massive convertible note tranche that is kind of illiquid. It's just like all the corporate debt on ETH Strategy is liquid, and everyone has their different options that they can exercise. And we issued these notes, and essentially we have two players on the protocol. So there's two sides. There's the STRAT side, where it's the people that want high leveraged ETH, beta ETH, like better ETH exposure, and they're bullish on ETH price. that's the Strat side, and their irrational bullishness allows this protocol to kind of issue these notes to more, I guess, rational USD holders that just want high yield. And the protocol opens up this same trade. It opens up this volatility trade on chain for USD bonders to come and chase this high yield. And we productize this through Vault, which we can talk about later. But they essentially are able to take out this trade, get very high yield on their USD. And the USD that they're putting here gets given to the protocol to go buy ETH. And that ETH gets put behind Strat, so Strat holders are happy. They're accumulating more ETH and more premiums and more ETH per Strat, and bonders are happy because they're getting very high yield on their USD. And if ETH goes up, they also convert to Strat and also make a bunch of money on that side too, and close their trade off. So at its core, that was really where the inspiration started, and that's basically the main form of how we accumulate ETH. There is also this other form of equity issuance where, similar to TradFi right now, where they really caught onto this at the market issuance stuff, ETH Strategy does have something similar to that. It is much harder to recreate in a DeFi native way, but we have dug in to do something like that in the LP. Using a mixture of different ranges and hooks, V4 hooks, we can kind of mimic some sort of ATM issuance that also allows us to issue Strat at market premiums and capture those ARBs and buy more ETH that way. So yeah, that's at its core, we do exactly what these listcos do. We just do it fully on chain, as autonomous as possible. And yeah, like we are DeFi builders, so we really enjoy bringing these TradFi financial engineerings on chain.
So Strat launched, by the time this is out, did it launch July 30? Or for Australian time? Was that the day of launch? Or
29th? Yeah.
Okay. Run me through the process of getting that live. I know that was a big sprint for you. I'd like to hear your side of how that all went down. And congratulations again on the launch. I know that stuff is not easy. I get stressed out claiming airdrops at 2 a.m. So I can't imagine what it's like actually launching a full protocol with 9 figures of liquidity ready to go, having multiple sales moving into that launch. Run me through the process.
Yeah, definitely stressful. But I mean, that's the game, right? Like it's what makes you feel something. But no, the launch was well, ETH Strategy is quite a complex implementation overall, if I'm being honest. There is a lot of moving parts with this protocol, a lot of smart contracts. We are fully audited 2 times, and we've had a lot of validation on our contracts and whatnot. But we do not want to just deploy everything and hit the market with all of our moving parts at once. So the entire protocol is still actually, as of now, not fully deployed. We've only done a certain portion of it, and the entire protocol will be deployed over the coming month or a little bit over a month in multiple stages. We think that's the best way to kind of roll this out. Staged rollout is the way we're approaching this. And yeah, July 29th was the first stage where basically post our leading up to that, we've done a private tranche, a private placement to raise some equity. We then opened that up to the public because we believe in democratizing access to investing in early stage opportunities. So we did a public round. We also did a quick, we had a great deal to do a quick puttable warrant, a warrant with a put attached to raise even further equity. That basically created our equity layer to start with. And then we launched the token. We launched the Strat token in the LP, and that's basically the first stage.
Okay.
Now
what
we're
are the next
gearing
stages?
now we're gearing up to a couple of next stages where, broadly speaking, they include the bonding. So the bonding's not launched yet. That will come out. So that note strategy that I talked about. A vault that automates the bonding and kind of creates a new kind of vault for USD stables to just chase yield in DeFi is part of the next stages. And also the ability for Strat holders to use their Strat as collateral to borrow the ETH in the treasury out of the protocol. So this is something these are the primitives that are not possible in treasury listcos in TradFi. but we can do on chain, right? And these are the core things that we're rolling out. So yeah, STRAT will be used as a utility to use as collateral to borrow the ETH out. Crucially, not based on its market price, but based on its backing. So liquidations are a little bit easier too. So you can realize a lot of the ETH per strat actually by borrowing it against your strat. And that does give our treasury some native yield. It also prevents RFV attacks and a whole bunch of other benefits. But not to get carried away, yeah, those are basically the stages. Is the bonding, a little bit more refinement on our at the market issuance in the LP, the vault on top of bonding, and being able to use STRAT as collateral, and a few other things that we've got in the pipeline.
In terms of understanding like broader dynamics of ETH Strategy, and I'm sure this applies to other strategy companies and protocols as well, but to the uninitiated, because I had some questions, I received some questions about this. When we're looking at an on-chain strategy protocol, when do we start to think like, is it overvalued, is it undervalued, and when is it trading at a premium? These kind of like top line, when can investors look at this and start to mechanize where value is either like, accreting well, or it's starting to become overvalued relative to MNAV or just relative NAV?
Yeah, so I'll be honest.
Sorry, just opened up a fucking monumental can of worms.
Yeah, so I'll say like I'm pretty deep in finance, and like I can being in crypto and being quite like adaptable to how retarded financial engineering and economics and tokenomics can get. Like I'm very open-minded to this stuff, but this treasury meta has really like blown my mind out of proportion on how people are valuing these things, and the mental gymnastics they're using for the economics behind this is quite crazy. I do think there's some substance, but it takes a certain person to care about how much of this is really like the right way to value these things or not. So there's a lot to cover, but to keep it brief, I'll say like the key metric that I think that a lot of like Wall Street is kind of trading these things on is, and I'm going to use the term EPS, which is ETH per strat or ETH per share, but this is across the board. Like if MicroStrategy, it's BPS, like Bitcoin per share, like just asset per share, right? So I'm just going to use EPS as a broad metric, but I think what Wall Street looks at for success and valuation of these treasury list goes is basically, are they increasing EPS, and crucially the EPS velocity that they're increasing it at. So it actually becomes interesting how, at the beginning stages, like let's say a listco will start issuing some converts, and they're stacking some EPS, and they have a growth of 10% EPS growth in the quarter, and then in the next quarter they have like 20% EPS growth. That's like double EPS growth in the next quarter. And then if you look at the stock and it's trading at like a 2x premium, right? So like fundamentally they've achieved 20% EPS growth, but the stock is trading at 2x, like 100% premium, right? And that's what we call MNAV, the multiples to NAV. So the NAV is only 20% premium, but like it's trading at multiples of 100%. Then Wall Street is technically, or the market is technically pricing in that these guys can build their EPS up to this 100%, like fundamental EPS can increase from 20% to 100%. That's what the market is kind of buying this at, right? And the reason why the market, I believe, is justifying this 100% is because they think that the velocity that they're increasing their EPS, so like in my example, they're going from 10% to 20%, that's like a double like velocity. That's like over the quarter, they're doubling their EPS. The market is kind of pricing in that next quarter, if they double again, it'll go from 20 to 40. And the quarter after that, it'll go from 40 to 80. And the quarter after that, it'll go from 80 to 160. So if they're buying it at 100% premium now, based on the velocity that this company is increasing their EPS, they're just taking a trade on time. So they're buying the stock at 100% premium based on the velocity that in 3 quarters, they will be well in the money because the EPS would have been increased far beyond this. And not even just fundamentally, but the market will price future velocity even higher. That's the craziest part, right? So Like this is what I mean. Like the mental gymnastics that are happening with these fucking list codes is like nothing I've ever seen before. And this is me keeping it very high level, but this is a lot of basically how they're pricing. It's the ability to issue, ATMs or debt and increase EPS, and the velocity at which they do that. And they trade that in the market, and that's the valuation. So to answer your question of, what's overvalued, how do you value, like that's how you value it. That's how the market is valuing. I don't know if you want to value it that way, but if it's
Yeah.
like if you're like me and you just accept the absolute chaos and just value it accordingly, like then your question of like what is overvalued is basically like, okay, if there is a company that is being priced at like, I don't know, like 300% MNAV, right? Like it's pricing in like 300% over its like fundamental fucking NAV backing. Like you can, and you see that their EPS is not actually increasing at a very high velocity. You can kind of assume that it's getting overpriced, or that it's like not worth that trade in time. You're not going to make up your like trade in enough time. But if the MNAV is very close to like its actual like NAV, like if its multiples to NAV is quite low, you can assume that you're going to make up your trade quite quickly. So if there's a company that its EPS is going from 10% to 20% over the quarter or over the month, for example, and its MNAV is literally still 20, 30%, like it's only like trading at a 1.3x, 1.4x MNAV, like you can assume that in a couple months, if these guys still like increase their EPS at this velocity, I'm like well in the money, and that's like technically undervalued. So this is kind of like a gist of how people think about these things, and this is definitely the success metric that I share with ETH Strategy. Is like our goal is to increase EPS, and I think there's a fine line with like velocity. I think like there's been a lot of obviously like philosophical talk and think and deep thought about like, do we want higher velocity? Do you want to like kind of keep your velocity at a certain rate? Like there's all these things, right? And like how much you can actually do with like what the market gives you with its volume, or like the appetite for your converts, and how much you can control and how much you can't control. And it becomes this whole mess of a thing that honestly I can't even get into. But yeah, like that's the fundamental metric, is increasing EPS. And the velocity at which you increase that at.
Yeah, okay. Because I imagine if it's like temporarily extremely high velocity, that could cause like almost like reflexive run-ups and then really fast sell-offs as well, in terms of like
if you're not able to sustain. Yeah. If you're not able
like
to sustain the velocity. Yeah.
Yep.
Yeah, and it depends if the market takes that trade too. Like if they actually...
True.
If they decide to really price that initial spike in velocity or not. So yeah, it's really complicated.
Yeah, and you're dealing with almost like second, third order layers of abstraction of how people are pricing the future velocity compared to actual acquisition, compared to like linear, like accretive dilution over time as well, premiums on that. Okay, yeah. Lots of moving parts. Speaking of lots of moving parts, what do you make of Tom Lee and Bitmine at the moment? How do you think they're faring, and how do you think that continues to pan out? Clearly, it's been very, very good at kind of spurring ETH bullishness again. Tom Lee showing up on CNBC and just saying, buy fucking ETH. It looks great. Even the Blockworks guys are like, okay, cool, we're bullish ETH now. What's your read on Tom Lee and Bitmine and how it's going?
If I was to take like a super like abstracted view on these things, I think a lot of this is a fundraising exercise, and your faith in the, especially when it comes to like on-chain might be a bit different. I think there's a little bit more emphasis on the mechanics and flywheels on chain, but when it comes to TradFi, I think there's a lot more on like main character energy, and I think Saylor has that premium. There is really a main character premium when it comes to these Listco, TradFi Listco ones, and I think Tom Lee has that main character premium because people just like, and he's proved it. He has the ability to raise pretty fucking hard, right? He has the ability to raise harder than Lubin, and he has done so far, and he might continue to do so. And I think that's very bullish for Bitmine. Recently, and I've been extremely busy in the last couple of days, obviously, with this token launch, but recently all I saw was that they actually decided to do a stock buyback instead of an ETH buy. I haven't really sat down to like think about like how I think about these things. It's interesting. I don't know what the repercussions of that are. I think generally speaking, because we have so many treasuries now, like, you know, TradFi had its own OHM season with these fucking Liscos. Because we have so many, I think they're going to all start doing some different stuff. It's the only way to separate themselves from just pure, like, oh yeah, we're doing the same playbook, but we have different like velocity on our EPS growth, or we have the different ability to raise. I think they're all going to start doing different things, including their stock buybacks, or maybe like buying different assets, or using some sort of different leverage, whether it's not just debt or equity issuance, some sort of like more degenerate, actual like liquidatable loan leverage. I know like BTCS, I think it is, they actually have an Aave loan on their treasury, which is insane, right? In my opinion, like I think a big part of these treasuries is being non-liquidatable, but they went ahead and had that aspect. So yeah, I think we're going to see a lot of treasuries try and separate themselves with their strategies. It's the only way. But yeah, I think Tom Lee, like, pump my bags, man. Like I think it's great. Like, get on CNBC. We need the main character energy. I don't know how Bitmine, like, for the most part, I think a lot of these treasuries are going to struggle over a long term, over the next 4 to 5 years. I think there will be a couple that come out quite successful. I think Bitmine has a very good chance of that. I think SBET has a very good chance of that. But yeah, like I don't know. I think that he has the ability to raise, and this kind of touches on the previous conversation of how do you value these things. I think really abstracting away all the really mental gymnastics behind EPS and EPS velocity and you know, all of this, it really does come down to buying based on future bonding demand or future EPS growth in general, and having a main character like Tom Lee is quite a fundamental bet on future demand. So that's a good way to look at things.
Okay. Well-rounded take. What do you make of ETH price action in the last 2 months? We've bounced from 1500s all the way up to nearly 4 as of today. What do you see as the main reason behind? I mean, I know that you're very happy about it, so like we don't have to dig into the weeds about how you feel about it. But why do you think it's taken so long for ETH to move directionally the way it has? I feel like you and many others were on the timeline being like, it's going to happen. I think I swapped my ETH for Sol at somewhere along the Pico top of Sol ETH, which is hilarious. But, you know, I'm now gradually accepting, I'm eating my humble pie and gradually accumulating ETH beta over the past few months. What do you make of the outperformance?
I think like I've always had a much more just like less noisy take in general. I know like I'm the perma bull of ETH, right? Like you ask me like, oh, what do you think about ETH at 4K? I'm like, yeah, it's 4% of the way there, right? Like that's my take. But I think like my actual like holistic rounded take that might not come through on my tweets or my general gist is that like every bull cycle, like I've been in crypto for quite a long time now, unfortunately, fortunately, I don't know. Every bull cycle is the same. Bitcoin leads, dominance goes up. Everyone thinks that like, you know, Bitcoin is the only thing that's going to come out of this bear market. Alts are dead, and it usually goes on to the point where people actually like really get into that sentiment. Like the death of ETH parties is no joke. Like that shit happened. It's like you know, this time it was not just the death of ETH party. It was kind of like a death of ETH like long bender festival. But like this shit
18
happens,
months
right?
Of like,
yeah,
it's done. Pack it up.
It's
smelly
done,
boomer
yeah.
chain. Get rid of it. Yep.
And I'm part of that. Like I didn't expect BTC dominance to go all the way to 66%. Like that was quite a fucking lift from the bottom. But then like I was always in the impression that like, look, macro environment is going to change, easing is going to happen, animal spirits are going to come back. If Bitcoin does good, all of crypto is going to do good, and the natural next like, you know, liquidity drip down is into ETH, right? It doesn't matter what people think. Even to a certain degree, I kind of think fundamentals like kind of take a step back when it comes to bull markets, right? Like I think fundamentally ETH is amazing. It's leaps beyond, if you ask me, even Bitcoin or like, you know, Solana. Like don't even talk to me about that. But like I think like fundamentals take a step back. It doesn't matter like what fundamentally is happening with these projects, and you know, people on the timeline can talk about like, oh, it's overvalued because of this and it doesn't have this much revenue, and like fundamentally the block space is this and the DAs got separated, and like they can like try and convince themselves that they are understanding the valuation here, but like in reality there's always going to be a time that liquidity is eased as fuck in macro environments. Bitcoin kind of gets squeezed pretty high, and that liquidity comes down, and ETH just runs very hard. It is the scenario. So I was just betting on this as always, and it's starting to play out now. I think we're going to have like a bit more of a general adoption of ETH in a macro landscape this time around. Like TradFi is FOMOing pretty heavy. So I think this might be a cycle where ETH does kind of actually decouple from Bitcoin fundamentally, and kind of trade on its own based on its actual, like, ironically fundamentals and adoption. But it's too early to say that. But yeah, I do think that this cycle's looking pretty good for that type of decoupling, and kind of like ETH being its own market of its own. I think crypto's kind of gone on for too long with the general, like, you know, Bitcoin as the leader, everything else is an alt and whatnot. So yeah, I don't know if I really answered your question.
No.
But yeah, that's my general thoughts. Yeah.
Okay, that's good. I know you said don't ask me about it, but I'm going to, because I love clouded Solana take. And just my read on the whole thing was like, you know, Solana was so non-consensus mid 2023. No one wanted to fucking own it. And it had that like race to like, well, fair valuation, but like Donald Trump launching a meme coin in December 24 from $8 in July of 23 kind of thing. So you had that like massive, like, okay, this is a usable chain, sure. I know I had a lot of fun, and then not much fun eventually on Solana. What's your take on Solana now? Because it's been one of those non-consensus trades where I feel like ETH was the consensus in 23, 24 of like CT. I know CT was ragging on it, but it was almost this idea there were no indiscriminate buyers of ETH during that period. Now there are, with Tom Lee showing up on CNBC. You have that large TradFi, almost like crack bid on ETH. Like we need to own it, and we don't care what price we get it at. This has been sitting like range bound for too long. I want to acquire as much as I can, and I'm fully partial to that argument. I think it's a great fucking idea, and I think that ETH is still relatively undervalued by a huge margin compared to what it should be. Solana, I don't know. I can say the same, but what are your thoughts on Sol moving forward?
Yeah, I don't. ETH at 4K, 4% of the way there. Sol at $200, 200% of the way there. Okay, look, I'll start with a positive. I actually think Solana this cycle has attracted some real users and real fundamental like demand. So I'll give them that. I also kind of appreciate the way that the Solana leadership or thought leaders or just like front-facing people, they kind of do take engineering approaches to things. And the one thing I will really give its roses on is that they really took that underdog position and they used that hunger. They really like looked at ETH and saw like, okay, where did ETH kind of like, what did it fade? Where did it go wrong? Like, how can we capitalize? And I really appreciate that. I think they did really good from that perspective. Like that hunger, like really drove them to compete and try and like, and, you know, do novel engineering solutions that ETH didn't try or gave up on too easily, etc. That's about all the roses I'll throw. I don't know, like in terms of its price, I do think Sol like it's funny because the Sol people say, oh, Ethereum the network is fundamentally valuable and will always be, but ETH the asset won't capture the value. But I think that kind of applies more to Solana in my eyes. Like I think maybe Solana the network might actually be used, but Sol the asset probably doesn't capture a lot of the value. I think like Sol itself is less of a value capturing monetary asset than like ETH is on its own network, right? Like I don't think they have the same form of L1 premium. I think a lot of the L1 premium on ETH comes through it's really censorship resistant, like like untouchable, unstoppable nature, right? The permissionlessness and whatnot, and the reliability. Like I think Sol kind of lacks that aspect. Also, it's not as great with its monetary control system. Like it's very inflationary. They couldn't pass their proposal to kind of like decrease staking inflation or whatever. And I know some Sol people are going to be like, oh, like Clouded's fucking wrong, and I probably am because I don't pay too much attention to that fucking ecosystem. But like the general point is, I think it's less powerful as a monetary asset than ETH. I think, I think there will be a bunch of Alt L1s, and Solana probably be one of them because they have some interesting engineering feats there. But I don't think it's in competition with Ethereum. It definitely is. Like I share the view that it's in competition with L2s. Like I think Sol is punching against like Base and Arbitrum and whatnot. So I think I do share that kind of view. I think ETH it's just far in a league of its own. And when you see Solana valuations like become like almost 50, 60, 70, whatever it was % of its market cap, like it was kind of like in hindsight, like obviously one of these was either severely overvalued or undervalued, right? Like that was, yeah. So, yeah, I mean, I don't know how Solana plays out, but I think that we went through a very fucking long period of psyops and strong psyops and marketing on their part. Like they had some strong pushes to really try and get that mind share, and I think some of it succeeded. But I think we're coming out of that. So people are going to sober up a bit from this stuff, and they're going to like realize like, oh no, like ETH is still so much better. And honestly, just from a personal perspective, like building DeFi, there's like no other chain other than Ethereum that like I would want to use. Like Solana it's coming up quick, but it's still so far behind in a lot of aspects for something like this. Yeah, Ethereum is just the only place I think where serious builders, like when you want to build institutional level stuff, or you want to build like really like core primitives and things that like really, really like matter and are pretty strong on chain, like I think there's nowhere else other than ETH. So I also share that view, to be honest.
Okay. No, that's interesting because like I remain like I like Solana quite a bit. I have the majority, like a good chunk of capital still on there. But I do just fear dilution and kind of like almost zero-sum games occurring over there at the moment in terms of like the big PMF is launchpads. And that was fun for a very long time while there was still edge to be had as a retail participant with launchpads and that meta. But I am interested because this is something I actually, like I'll confess to not knowing that much about. Talk about ETH being better for building DeFi. And I hear this a lot. But what does that look like at a technical level? Like, why is Ethereum better at building more complex DeFi primitives than Solana at this point in time?
Range of things. Probably like my dev is a better guy to talk to about this, but I think like
true.
true, right? Like
break down the code. Tell me. Come on.
Like I do more of the finance stuff. They do the code implementation, but there's a lot more tooling on ETH. And the way that like the composability across protocols and liquidity works is just completely different. Like hooks on V4, a lot of people are still fighting it. Like I think it's actually really interesting. Like I think like for us at ETH Strategy, we spent a good chunk of time exploring how hooks can play an at the market like strategy in V4. Like I don't know if that's like really possible on Solana. And just being able to integrate with like nice liquid borrow lens and be able to take your ETH and put it into a range of strategies and do all of these things. Like, yeah, you could probably do it on Sol, but I don't know. Like ETH is just better for DeFi, and I know a lot of DeFi builders kind of share these things. And I remember specifically my devs saying like, oh well, I tried to do this on Sol and it was like fucking pain in the ass compared to like what I'm doing on ETH right now. Like. So yeah, like can't get into technicals with you on that one, but definitely I think the DeFi atmosphere on Ethereum is much further ahead than Solana.
Yeah, okay. What do you mean by hooks when you talked about those before? Neanderthal question.
Oh yeah, this is like a new Uniswap thing. This has got nothing to do with ETH Strategy. This is like Uniswap V4. So V3 is obviously like the most popular thing right now. V4 is actually launched recently, and V4, the core thing is like this thing called hooks, which allow you to kind of like run programs on liquidity pools. Like hooks can do, like you can build hooks to do a range of things. Like for example, let's say there's an LP, it's a very deep LP. There's like, $50 million of ETH and USDC in here. And like, it's not very capital efficient because it's just sitting in the LP. Like, let's say all the way down the range, like, if ETH is trading at 3,800 or whatever it is, let's say like the ETH that's sitting at like $0 to $1,000, right? That's not being used. Like you can build a hook in V4 that kind of like hooks that ETH out and puts it into like a lending pool that can be lent out and like maybe boost its yield or whatever. And like, there's like a range of, and hooks are so early on, like I'm not like a massive fan or anything, but this is just something that's been very prevalent in my work recently. And I think like we're going to see a lot of like use cases of hooks being built out in Uni V4 and increase capital efficiency with LPs and functionality with LPs. Like you can use it to kind of like do at the market issuances with ETH Strategy. Like you can hook in, like you can hook out like the ETH from the buys of STRAT and put it into Treasury, and that's like, that's as similar as you can get autonomously to an at the market issuance. It's like, but that's Uniswap V4. Like that's totally nothing to do with us, but I think it's interesting. Like I think DeFi innovation on Ethereum is always leading the way.
Yeah, no, it's always interesting. What was it that inspired you to build ETH Strategy? I know we've already gone a bit over like the process of, launch, how it all works, but I am intrigued as to what spurred the idea of like, I'm going to do similar strategy playbook, but for ETH. Where did that idea come from? And why did you decide to like follow it through and, undertake all of this?
Honestly, it actually started like maybe 3 years ago. To be completely honest, I was trying to build a DeFi protocol that really like, I came across this thesis 3 years ago. The thing that really is going to push DeFi forward is credit, DeFi credit. Permissionless credit is the thing that needs to be really pushed and expanded to push the entire DeFi space forward. Because when you look at DeFi, at its core, it's finance. And finance, like the most important primitive, like I believe, is credit. So I was like hunting in the direction of how can we expand credit in DeFi, and I actually wrote a whole bunch of research papers on this. I like did like proper like deep dives of like, how this works, like how credit works, how it can work in a permissionless spectrum. And like ultimately I couldn't really get this protocol anywhere. It was called OnCred, in case like a lot of my early followers like remember me working on it or whatever. Shout out to those guys. But it never managed to be like productized. But the kind of angles I was hunting in was insured like leverage, non-liquidatable leverage, long-term leverage, like under collateralized leverage, like this type of stuff, like hunting into this in a DeFi realm. And whilst like, there was a lot of primitives that we came up with, like I said, couldn't productize anything. So kind of went away in the bear market, kind of like burnt out from that, trying to build something new and innovative, and took a bit of a break and did this like other kind of fun project that you might have heard of called like the International Meme Fund. And then
may have heard of it. Yeah, no.
May have heard of it. Yeah, I don't know. But Cartelio. But then kind of like around the ETH conference in Bangkok, the big one, DevCon. I was talking to some like old DeFi friends, and I was like, and that was when really like MicroStrategy was on my radar, and I was looking into it more heavily, and I was like, these guys like Saylor kind of like fucking unlocked like a productization of what I was hunting. Like he found a way to kind of like push liquidation risk further down the spectrum and like achieve credit to do what the fuck he wants, right? Like, and like, which is through the converts. And I was like, kind of like, I was pretty mesmerized. So I floated it with like my main business partner and like co-founder and whatnot. And he went away and talked to a bunch of quant friends that he knows. And he came back to me. He's like, dude, we can do this on chain. We can do this better on chain. And I was like, all right, well, let's fucking do it. Like, let's do it. And that's basically towards the end of 2024 where we kind of wrote up a white paper on ETH Strategy. Then I posted that through my personal paragraph page, like where I very rarely write articles, and kind of just put that white paper out and messaged a whole bunch of people that like I know in the space, like, you know, like lots of friends and people that I respect in the space, and it caught fire. Like within 2 weeks, I think I had like 100 of like some of the biggest brains in ETH and like coolest people in the ETH ecosystem kind of like telling me like, yo, Clouded, this is really good. And then that kind of validated to the point of like, okay, I think we should just do this. Like, you know, let's like, there seems to be some sort of attention and demand on this. And that was really the start of ETH Strategy, which was the beginning of 2025 in January. And from there, we kind of like, you know, refined the entire like idea a lot more, did a lot of market validation, did a lot of BD, did a lot of community building, and actually started raising and kind of like, you know, getting to where we are now. So that's the past 6 months, but that's really the history of it. Yeah, I think Saylor kind of re-inspired something that I was like hunting for like a very long time 3 years ago, and it became a meta now, which we kind of built into. So it kind of all came together really gracefully, in a weird way for myself. So yeah.
Hell yeah, dude. That's fucking awesome. Dude, where do you want people to go? What do you want people to go check out after they've finished listening to this episode? Where should they head? What should they do?
Yeah. Definitely go to the ETH Strategy Twitter account and turn on notifications, because that's like where we're going to be announcing everything as we roll out and do this stuff. You can jump into, there is a public Telegram group that we just started like a week ago. You can jump in there, ask any questions from the team, and get involved with the community if you like. That's about it for now. Like, I think just, yeah, pay attention as we roll out, and there'll be opportunities for users to really come in with their USD and do some bonding and whatnot. You should buy STRAT if you're bullish on ETH. It is available to buy. It's not financial advice. Make sure you do all the complicated mental gymnastics of, you know, if like seeing if the EPS velocity is worth it or whatnot. But yeah, buy some STRAT. And yeah, just like honestly, dig into it a bit. I think it's a really interesting primitive that we've created if you're into this DeFi stuff, and feel free to reach out. That's basically it.
Hell yeah, dude. Yeah, so for anyone listening, I'll include links in the show notes as well, but if you want to go check it out, it's ethstrat.xyz for the webpage, and then ETH_strategy on Twitter. So head over, check them out. That's fucking awesome. Clouded, man, thanks so much for coming on the show.
Yeah, thank you for having me, Tom, and yeah, all the best with everything.
Cheers, man. Appreciate it. Bullish strat. Let's go.
Hopefully we make it on the My podcast.
Yeah, but now that I assess my portfolio, I'm starting to see why it's called the NGMI podcast. Hopefully Strat can change this for me, and it's not the curse. We'll see.
Hopefully.
Fuck yeah, dude. All right, man. Listen, you have a good one. Thanks again for coming on. That was awesome.
Thank you, man.